Hello, everyone. Thanks for joining us today on our second podcast under the banner of UKGI Live. I'm Dave Anderson, Head of Technical for UKGI Limited. I'm joined by Alistair Horton. Al, I'll let you do your introduction.
I'm Al Horton. I'm a Technical Resources Manager for the UKGI Group Consultancies. I work in the background creating bulletins, news items, making sure that the UKGI or the group consultancy manuals are up to date. And I go away and do the background reading and reading the rules and reading things about what the FCA does. And I then provide that information to the consultants to then take out to firms to do their job in making the rules live and breathe.
And we're quite privileged because we're joined by John King today. John, I'll let you do your intro in a second, but we're going to have a conversation today that's broadly going to look at culture, conduct and accountability within firms and for senior managers of firms. We know that it's very prevalent on the FCA's radar. The FCA as the UK's financial watchdog, perhaps that's fair to say. They regulate the financial services industries and they ensure firms act in the best interests of their customers to maintain competition and market integrity. It's no coincidence that conduct is part of their title. And we know the FCA focuses on culture and governance in financial institutions to prevent misconduct and to drive good customer outcomes. Because of your experience, I feel like you're an ideal individual to be joining us and sharing some of your insights today.
Thanks very much, Dave. Yeah, for those that don't know me, I'm John King. I was with the regulator FSA and FCA for 16 years. Left them about 5 years ago, mainly to take up a portfolio of NED roles, most of which are with the insurance broker Howdens. And I also work quite closely with UKGI. So happy to be here today.
Thanks, John. One of the things that prompted us to decide on this topic was joining the FCA's recent Consumer Duty webinar. Culture was mentioned heavily throughout. And John, did you attend that webinar?
Yeah, no, I did. And it's still available on a webinar if people want to watch it. And in a way, it was quite pleasing, really, because culture had been perhaps put on the back burner whilst Consumer Duty was being introduced and embedded. And I think in a way, it was a welcome return, because if you look on the FCA's website, it's a subject that they've been talking about since 2015. And sort of Jonathan Davison was the director of supervision at the time, was the sort of big driver for that. Obviously, he's gone now and Sheldon Mills has replaced him. So obviously, Nicol Rath's Consumer Duty is the flagship policy. But I was quite pleased in a way that a lot of the people on that webinar were talking about how important culture is. And culture is hard to define, and FCA has sort of shied away from it and called it its attempt at defining it is the habitual behaviours and mindsets that characterise an organisation, and recognition that there's not one size fits all. And I'm sure you've all got your own sort of definitions of culture. I think the one I like is what people do when they aren't being watched.
That's one of my favourites. Stolen my line, John.
Sorry.
How did the FCA define culture? Habitual behaviours and mindsets that characterise an organisation?
Yeah. And because that's a touchy-feely thing, quite hard to get your hands around it, instead they look more at what they call the drivers of culture. And there's 4 of those, which is purpose, leadership, approach to rewarding and managing people, and governance. And a lot of those are about people, things, and hence accountability that obviously we're going to touch on later in this talk. And really, why does the FCA focus on culture? Well, I think if that's right, everything else tends to follow from that. And obviously the flip side of that, if it's bad, then I think you're going to get sort of poor outcomes for customers. Firms' cultures have been a major root cause of conduct failures.
I think that's really fair to say. As part of a culture, and it's going to be important for firms to define their cultures, how instrumental is leadership as part of that?
Yeah, no, I think that's a good question, Dave. And I think that's the main driver. I mean, that they haven't sort of said it as much in those 4 points, but really what they're getting at is the tone from the top. And so, the senior managers in the SMFs, in our regulated world, they have got to sort of set the right example for the rest of the firm to follow.
I think the more you start talking about this, we could easily stray into talking around diversity, equity and inclusion, non-financial misconduct. And I know we'll probably touch on some of those things as we talk through things today. But that word conduct, we can't get away from that, as it links so much into what you've said already. It's about how people behave as a firm, as an individual. Are you doing the right thing? For me, that cascades out of SMCR, which landed in 2019, and COCON's conduct rules. What are your views on that, John?
I think you're absolutely right, Dave. I think conduct is how people behave. As you say, SMCR introduced the sort of conduct rules. There were 5. You must act with integrity. You must act with due skill, care, and diligence. Number 3, you must be open and cooperative with the FCA. Number 4, you must pay due regard to the interests of customers and treat them fairly. And then number 5, you must observe proper standards of market conduct. And the FCA introduced a 6th one recently alongside the Consumer Duty, in the sense you must act to deliver good outcomes for retail customers. And this is quite sort of timely, end of August, that we're doing this podcast, because firms have to report conduct breaches to the FCA on their annual Repo 08 form, where they've taken disciplinary action where a person has breached the conduct rules. And I think, as you mentioned earlier, non-financial misconduct, diversity and inclusion, the FCA has really broadened what is misconduct. I think it was a while ago they sort of said, non-financial misconduct is misconduct, full stop.
Yeah. Do you think it's probably something that we've seen when we've worked with clients, but there's perhaps a lag with firms getting their heads around what they need to capture as part of that Rep 08 return, and where they're perhaps linking in with HR and looking at performance management challenges that fed through to actions that are perhaps seen as breaches to COCON, the conduct rules, and properly reporting on them. Is that fair to say?
Yeah, no, I think you're absolutely right. I mean, and I think, we've had this for a few years now, and we've had COVID, just after the introduction of SMCR. So I think the FCA was giving firms some leeway on this, but, this will be a few years now that firms have been reporting the Repo 08. I think in the first year, from a freedom of information request, there was only about a few hundred, 662 across employees noted in a Repo 08 form across, 5,000 insurance firms. So what's that? That's about 1 in 8, 1 in 9 firms actually reported something. I think you're right. From some firms might not even have HR departments, certainly the smaller firms, but I think even in larger firms, there's a lack of joining up between the HR disciplinary process and the compliance people in terms of having to report these to the regulator.
And where we can't escape the importance of properly managing and overseeing conduct within your firms, because it cuts across so much of wherever you look at the moment. Like we've already said, you look at the Consumer Duty, it's instrumental in applying that appropriately to your firm. We look at non-financial misconduct, we look at DE&I, SMCR, we can't get away from it. If culture and conduct isn't properly identified, managed, and embedded within a firm, who's responsible for that? Because ultimately there should be a statement of responsibility with an individual SMF's name on it. And they're the person that's they're carrying the can for that within their firm.
Absolutely, and there's prescribed responsibilities in this space as well. So there's no getting away from, I didn't know I should be doing that. Someone has got to have that prescribed responsibilities, for compliance with the conduct rules.
Are there any sort of standout scenarios of sort of major failings from a conduct perspective that spring to mind when we're talking about this, John?
Yeah, I mean, perhaps outside of the insurance space, although we'll touch on some recent ones later. I mean, I suppose, the big public ones recently have been the former fund manager, Crispin Odey, and sexual misconduct allegations. You've had Neil Woodford, the investment manager, and the Woodford funds, being invested into illiquid assets. I mean, ironically, they are 2 cases where the FCA has publicly said they are taking enforcement action against those individuals. The FCA is consulting on naming and shaming people who are under enforcement investigation a lot earlier in the process, simply because it can take 4 or 5 years to go through an enforcement process, and often there's a lot of the FCA is, in a way, stuck between a rock and a hard place, because they say, well, what are you doing about this? And then they'll say, well, we can't say anything because of FISMA confidentiality and things like that. So it is difficult for them. But that is sort of 2 examples. And off the back of certainly Crispin Odin, you've got the politicians heavily involved in that as well, with the Treasury Select Committee very interested and putting pressure on the FCA to what they're doing. We've had the Sexism in the City report as well. Again, getting a lot of interest from the Treasury Select Committee, which I think, as a result, has led to the FCA doing the non-financial misconduct surveys that were done in the wholesale space earlier this year. So wholesale insurance brokers such as Lloyd's and London Market. And obviously a lot of that was off the back of the history that Lloyd's has unfortunately had about what's been going on in the non-financial misconduct space there. But also, wholesale investment banks and wholesale investment brokers were also asked to complete that survey.
I think Matt Brewis, when he was speaking at a forum for the Worshipful Company of Insurers, the INED Forums webinar,
that's right,
earlier this year, very clearly stated that governance culture and non-financial misconduct are big issues to address, and they're a key focus for the regulator. Al, have you got any thoughts on some of the focus on this space?
I think it's not going away. I think John's definition of culture being what people do when they aren't being watched is really good. To combine that with the FCA's definition of talking about habitual behaviours, what are individuals and what are firms' habitual behaviours when they think they're not being watched. I think that's what underpins all of this. In relation to the regulator's focus in our sector, the survey of wholesale insurance brokers, I think, set a really good scene. As you said, Matt Brewis, when he spoke at the Worshipful Company of Insurers earlier in the year, certainly confirmed that it remains under an FCA microscope. Genuinely, I think that although they haven't spoken about it much recently, I think culture and conduct are issues that the regulator will continue to focus on. We've seen fairly recently even a case in a really small firm where a sole trader car dealer who was an authorised person was banned from carrying out regulated consumer finance or insurance activities after he was convicted for fraud in 2022 and he didn't tell the FCA. And that's a really small firm from the regulator's point of view, but the regulator has still chosen to take some action and to make that public. So genuinely, I don't think it's going away. And I think the focus on what firms do when they're not being watched is a really good way of firms thinking about when they choose to do the right thing, because hopefully they will choose to do the right thing, as Nikki Bennett would say, because it's the right thing to do. Hopefully they'll choose to continue doing that right thing when they're not being watched, particularly being watched by the FCA.
But that onus has to be on the leaders of the firm, doesn't it? Because it's the leaders that have the greatest influence. And it's absolutely right that this remains an area of focus because, whether you look at conduct, whether it's financial or non-financial, it can still have a significant impact on, the firm's reputation, their integrity, whether that's, bullying, harassment, discrimination, or any of those areas of non-financial misconduct. They can negatively influence the culture, which would then directly or indirectly cause harm to the individuals within the firm, its customers, if it's not recognised and appropriately dealt with.
I think, there are dangers for consumer harm, but there are dangers for the firms. We've dealt with a firm that we genuinely thought their culture was good and perhaps their conduct was slightly misguided, even though it was laser focused.
Yeah.
And, we engaged with them. We put them on a better path. They understood what we were telling them. They took it on board. And I think they were getting things right. They were trying to do the right thing for what they saw as the right reasons. And all of a sudden, an insurer didn't like the publicity, pulls the plug, and the firm goes under. That was really sad. And that was absolutely an impact for the firm. I'm not sure there was ever any customer harm there in that organisation, but the firm ultimately had to go into liquidation.
Well, that impacts on, market competition that way. So then you could argue that there's a consumer impact or a customer impact from that perspective. If we circle back to the FCA survey, John, how valuable do you think the data is perhaps going to be that the FCA receives in relation to that? What can they reasonably do with that?
No, it's a good point. It was very sort of 20 odd pages and going back for 3 years and all sorts of non-financial misconduct, how it had been discovered, what action had been taken. I just don't think firms have got that data. So I think they're going to get a lot of nil returns or, just firms haven't got that data. But I think it puts down a marker for firms to start collecting that data in that way. And going back to sort of culture and what you've just been discussing. And because FCA is getting accused of sort of overreaching here, what's this got to do with, as Al just touched on, what's this got to do with, financial services regulation, if you like, the day job, as it were. And I think, what the FCA would say is that culture goes across the whole firm. You can't have a good culture for your financial services regulation bit and a poor culture elsewhere for the rest of the firm, I think, because it's just going to, that poor culture, in the rest of the firm is just going to pollute the regulated bit of the business as well. So I think in some defense to the FCA, that is why they think, non-financial misconduct is important.
I agree with you. I think it absolutely has to be within the FCA's remit, particularly where firms, if they purport to have an outward facade of a culture, well, that can't differ. That has to be related to the culture they embody, internally, within the walls of the firm. And I think whether certain behaviours, particularly outside the workplace, do speak directly to an individual's fitness and propriety to work within the financial services sector or not, well, that has to absolutely, bring it within the FCA's remit. And I think there's such strong links between, positive, diverse and inclusive cultures, positive outcomes, good customer outcomes in terms of conduct, decision-making, whether it's commercial or, consumer outcomes, that has to align with the FCA's statutory objectives to protect consumers and ensure the integrity of the UK financial services system, promoting effective competition. You can't stray away. Can't ignore the fact that non-financial misconduct and conduct in general has to sit within the FCA's remit, whether it is directly or indirectly related to financial services activity.
I think you're right, David. I think it's appropriate as well. Let's just say that 50% of the financial services marketplace was able to demonstrate that there was absolutely no link whatsoever between the individual conduct of its employees towards each other, towards the general public, towards individuals outside of work. If they were able to show that there was no link between that and the impact of what the firm does on its customers, that 50% of the regulated world might be able to say, well, we can show you that there is no link. Well, what about the other 50%? And I think as long as there's even 10% of the regulated world where the FCA can see harms, customer harms, arising out of an inappropriate culture internally within the business, the FCA will keep it within their remit. I think it could be that small a percentage. And I'm not sure the regulator's got the ability or the resource to be able to measure that kind of thing, or whether the industry's got the data to be able to prove that kind of thing, picking up on your point, John. But I genuinely think that as long as the regulator has some evidence that inappropriate cultures within firms, whether that's customer facing or not, ends up impacting customers, they will keep it on their radar. And they've got a good chunk of evidence at the moment.
And although the firms and the governing body of the firms are responsible for appropriately identifying and embedding the right cultures and the right behaviours that influence conduct and outcomes that are experienced, we're always going to come back to SMF accountability, and individuals are going to be, taken to task when, there is a failing that's identified. John, how much do you think we've seen? How much of a move is there going to be by the regulator to make example of individuals to ensure this approach is hammered home?
Yeah, no, I think you're right. And obviously, firstly, the SMFs have further conduct rules another 4 conduct rules that apply to them as well. And, there's annual fit and proper checks for SMFs and certified people. And one of the questions, or some of the questions in the survey that we just been talking about was, have you changed anyone's assessment because of non-financial misconduct? Again, I think probably not many firms have done that. But again, as I said earlier, it gives a marker of where the FCA is coming from. I think they are trying to hold SMFs more accountable. I think the problem is the FCA's enforcement action just takes so long, years, that, you've got cases coming out that were done pre-SM and CR, things that were happening in 2019. So, we didn't even have SMFs at the time. Yeah. I think also individuals tend to put up more of a fight than firms if they're in enforcement action, because it's obviously career limiting for the individual. One of the few that we've had was and again, outside of the insurance sector, but obviously relevant because we haven't got that many examples, was the TSB Chief Information Officer who was held to account for a massive failure of a system implementation that TSB had a few years ago, and people couldn't get access to their sort of bank account. So, he was found to breach conduct rule for failing to take reasonable steps to ensure that TSB adequately managed and supervised appropriately its outsourcing arrangement. So I think that's a good example. Al has already mentioned the car dealer who was obviously acting without honesty and integrity, because basically he stole people's money. He told them that he'd sold their car, he hadn't sold their car when he had, and had kept the money to try and fund the business. LCF, London Capital Finance, another very high-profile failure outside of our sector in mini bonds. A compliance officer there was done for misleading financial promotions, but again, that only came out recently. But that was for 2017, 2019, when he was a CF1 and CF10. I suppose that in our space, and very recently, in fact, only last week, sort of middle of August, was that we had an insurance broker fined and banned for dishonest and reckless conduct, which was basically misusing the client money to fund the business and to sort of fund his personal debts. But again, that was something that happened in 2017 to 2019. So I think they are happening, but they take a long time to come through.
So as a first step for firms and your leaders at firms to step back and ask themselves a really simple question, is this right? Whether they're thinking about their culture and the behaviours that their staff are displaying, the behaviours that themselves they're perhaps displaying, is that a first step for firms? Because if the culture isn't right and individuals don't feel that they can speak openly and there perhaps isn't that psychological safety, that could be very restrictive, and that could perpetuate those failings and those bad behaviours, those bad elements of a culture within a firm.
Yeah.
What your views on how restrictive that can be for individuals, where they perhaps have that responsibility to, Principle 11, report anything to which the FCA would reasonably expect notice of. How much of that sits with the individual, and how much of that can be negatively impacted by the culture and leaders of a firm?
Yeah, there's a lot there to unpick, Dave. But I think one of the things I suppose I would say, FCA used to be called a sort of a listening culture, but I suppose a speaking up culture as well, that what you were touching on there, the sort of staff feel that they can raise their concerns. And the FCA puts a lot of weight on whistleblowing and, publishes the whistleblowing data that it gets. Now, in an ideal world, the FCA wouldn't get whistleblowing data because staff would feel comfortable in raising that internally with their own firm, and their own firm could deal with it without needing to get the regulator involved. Obviously, we're not there yet, and question, it will never be a perfect world, so there's always going to be something. But I think that's a good marker of a firm's culture, that, does it have whistleblowing procedures? Does it get much through it? And again, even if it doesn't, is that because, we're brilliant, or is it because people are just too scared to speak up because they're not sure what the consequences for them will be?
So there's a responsibility for firms to make sure they've got the internal policies and processes to allow staff to report and address those issues internally. And we know that breaches of conduct rules, they must be reported to senior managers or SMF role holders subject to the conduct rules. How much do you think there is an appetite for firms not to act appropriately, where let's say the culture has evolved over time? So where we've got brokers and firms that have been operating, they've got a lot of experience, they know their markets, they've been operating for a long time, and perhaps cultures have evolved and changed, whereas actions and behaviours that may have been appropriate or accepted historically now no longer fit within a modern work environment.
No, and I think that really touches on the FCA's diversity and inclusion aims, where it's looking for more diverse workforce. Again, it's because of the election. I think its findings or its policy statement or its next steps on diversity and inclusion have been delayed. I think there was also, obviously towards the end, there was quite a fractious relationship between the Conservative government and the FCA in terms of reforms, and, Kemi Badenoch saying that the FCA was overreaching on its diversity and inclusion work. So I think, the FCA and the criticism that it got over its enforcement consultation about naming and shaming. So I think, probably the FCA is just sort of having a bit of a breather. obviously got a new Labour government now, sort of forming its relationship with that government. Obviously, there'll be a new Treasury Select Committee members as well, given the changes in MP. So I think we're just in a bit of a quiet period at the moment while everyone just sort of settles down and finds their feet in the new regime. But I certainly expect that to come back. And I think, you can tell from what, as we said earlier, from what Matt Brewis was saying, is very much still on the FCA's agenda. I think it's going to be interesting when they do publish those results of those surveys. I mean, personally, I think it will be that they just haven't got the data. So it will be a step to firms start collecting the data this way. And so I think, certainly the direction of travel is not going to be, the old boys club, if you want to call it that, the pale, male and stale, whatever you want to call it, I think is on the way out.
There was a consultant that I was speaking to a few months ago, and they mentioned they were rolling out some diversity, equity and inclusion training. They were rolling that to the board of a firm. And, they noted that they sat down at the head of the table with the projector on and the screen behind them, and they were going to run through the presentation. And they were just faced by a sea of male faces, all of the same age, and they were all wearing very similar suits and ties. And it was really reassuring to see that firms that perhaps fit the ilk of a stereotype were actually looking to engage and evolve and, and learn on how to properly react to the requirements from D&I perspective, looking at a more inclusive approach to running their business. I'm conscious that, I've done what I always do, haven't I, Al? And we sort of go off on mild tangents. But I think broadly we've stuck to the thread of conversation that we wanted to. Al, are there any things that you think we should perhaps talk about whilst we've got John with us today?
I think that the key issues for me are culture, are inclusivity, diversity, not just of a workforce, but of thought. I think particularly I'm with John on the survey. I've wondered for a little while what we would learn from that non-financial misconduct survey. And I do fear that John is dead right, that what we will find is that there were next to no recorded examples of lots of the things that were asked about. I think the FCA might find that there is evidence within the responses that things have been hastily cobbled together. And for me, I wondered, and John, this might be something you might have not some insight into, but some experience of how the FCA think. If the FCA believe there absolutely is not the data and the answers have been cobbled together, how far do you think the FCA will go, or might they go, in relation to enforcing the collection of such data, considering it wants to be a data-led regulator?
That's a good question. I mean, I think firms would be pretty silly to make up cases in this, because I think, and even in the survey itself, there were some options for give us some more detail of that then. So I think the FCA could quite easily say, well, what was that case about? And let's have some more info on it. And why didn't you report it on a Repo 8 at the time? So I think that's silly. I think perhaps firms might go the other way out in the sense that firms might nil return it. And the FCA will say, hold on a minute, we've had some whistleblowing about this, or we've heard this about you. Why didn't you complete that form? But I think let's wait and see. I think hopefully the FCA is in a collaborative mood and will say, well, we've set out what we want now. Join up your compliance and HR people and start recording these things. I mean, I think the FCA itself is trying to give, and we might see that in the diversity and inclusion and other work that comes out, give more guidance on what it considers non-financial misconduct to be.
A really good point there, John. It's that link, that shoulder to shoulder approach between compliance, the senior leaders of firm, and HR, whatever that HR function is there, to be able to draw these things out. Because there is an expectation that firms should have those effective systems in place to identify and manage those risks as they relate to conduct, non-financial misconduct or other. If a firm identifies that there are failings, or perhaps their awareness that the Section 165 from the FCA to require information in relation to incidents of non-financial risk, maybe that pops it on the radar for them, so then they realise there's action for them to take. Is it enough to start now?
Better not starting at all.
Yeah. And what I would advise firms to do, and been trying to do this since the introduction of SM and CR, because generally firms are trying to do the right thing. And I think, a lot of firms, rightly so, don't have any disciplinary cases in a year, and probably firms would have perhaps a handful at most. Should be worried if they were getting hundreds of disciplinaries. So it is a relatively rare event. And so what I would say is just get into the mindset, well, every discipline, because there's not many, every disciplinary should be looked at through the lens of, is this breaching a conduct rule? Is this non-financial misconduct? And just HR and compliance being joined up on that.
Absolutely, with a forward-looking approach, perhaps not the requirement to go back and conduct anything akin to a past business assessment of the approach in this area.
But again, even that, what I've just said, that shouldn't be that hard, because hopefully, there
not
aren't
many
that
instances.
many.
Yeah.
And, we've been struggling to come up with some case studies for this. Firms might be able to obviously anonymize them, but use them to teach their own staff in this area.
One of the things that's become clear to me in preparing for the seminar sessions that will run in October in London and November in Coventry, and I think it's very likely that some of this discussion will find its way into sessions and content that we present on those days. In between now and then, if any firms are listening to this podcast and they have questions, they want to try and better understand how they could take action within their firms, then contact us at UKGI. And equally, if firms are struggling with support from a HR perspective because they haven't got that defined HR function because it's not proportionate within their firm to do so, there is support available. We have a HR consultancy within our group as well. So please do contact us, and we are here to help. I don't think I've got anything else that I want to fire out to either of you today, because if I do, Al will shout at me more than anything else. But I feel it's been really useful. Thank you so much for joining us.
Yeah, the only thing I'd say is attestations. And again, in terms of accountability and FCA holding senior managers to account, I think the FCA is using the attestation tool a lot more, where it gets a senior manager to sign that something has been done. So even though it takes ages for enforcement cases to come through, and so people might say, oh, well, that won't happen to me, attestations are happening now for certain things. And then even more generally, where firms are in the motor and home insurance market, every year, as part of their pricing returns, they have to attest that they are complying with those pricing returns. So I think, that's a real example of FCA holding sort of senior managers to account. And obviously, if you've attested to something and then it hasn't happened or gone wrong, you are basically banged to rights. And I think that would make the enforcement case a lot quicker for the FCA to pursue against you.
Absolutely. It's a cracking point to raise, John, because it's probably the first instance that we saw more prevalence of the FCA to follow up and say, okay, in completing this attestation, you said you were complying to the rules within ICOB 6B, for example. Show me all of the information you gathered together in informing your decision and your rationale around that. So it's that step towards asking firms and individuals of firms to prove it, which is something that Nikki Bennett's spoken about in sessions of late as well. So it's a cracking point to draw in. Thanks, John. Right, well, thank you both.
Thank you.
Enjoy the rest of your days, and we'll see some of you, I'm sure, on the next episode of UKGI Live's podcast.